It's really the cornerstone of any audit that's going to happen.
Because remember, the taxpayer always has the burden of proof.
Another way you could prove material participation is by calendars, emails, texts.
What you're doing right there is for the benefit of your business.
Just go up to your property manager, go up to your lawn care guy, and just say, hey, for tax purposes, I just need to know how long you work on my property, just because I have to beat you in hours to develop my tax plan.
If you meet any of these 7 tests, you are a material participator and you are subject to payroll tax. Welcome to this episode of the Hidden Money Podcast. Today, Kevin and I are continuing our focus on short-term rentals. And although this topic applies to other things besides short-term rentals, it is a key topic to qualify for the short-term rental loophole. You ever heard of material participation? That is how you can have a short-term rental's big old depreciation expense offset your W-2 income or offset your business income. That's the only way, well, it's one of the major ways, the definitive way to do it, although we're working on some other things too. So material participation is the name of the game for this podcast. Kevin, how many times do we talk about material participation every day?
10. I think my wife hears me talk about it so much she could probably consult on it, because it's really the cornerstone of any audit that's going to happen.
Absolutely.
Because what material participation is even if you're in another trader business, let's say you own a car wash or you have a CPA firm, whatever it is, your material participation, your involvement, management in that business determines whether that's a passive activity, which is probably not the most favorable, or an active activity. If you are involved materially, material participation, then that is an active trader business for you. And now if there's a loss in that active trader business, it's going to reduce your other active trader business income, your W-2s and things like that.
Yeah.
So if you're going to perform this strategy, an auditor more than likely is going to just start off right off the top saying, prove to me, Mr.
Well, that's assuming
Taxpayer.
they're a pretty smart auditor. Most of the auditors generally say, hey, this is a rental property.
You can't do that.
This is passive.
Well, assuming that we've gone past the beginning auditors.
Yes.
That they're gonna ask you about material participation, because one, material participation it's not an overly complex, but it's a very nuanced part of the tax code.
Yes, it is.
And two, it requires actual documentation, which most people are not excited about, saying, I have to document time, I have to do timesheets. I don't want to do that. I'm like, well, you don't have to do it. But if you do it, it's going to save you potentially $200,000 of taxes to defend it.
Or make your life miserable because you're trying to come up with a time log to prove material participation 2.5 years after the fact, because you're getting audited and you did get a decent auditor and they're asking about it. But before we get into the nuts and bolts and the 7 tests for material participation, let me kind of explain a little bit of the background of material participation. Why does it come up? The IRS and Congress did not create material participation to help people have a loophole to reduce their taxes. I wish they worked that way, but that's not how the IRS and Treasury Department works. They work the other way. They came up with this whole set of rules and regulations because they didn't like people who had side businesses not paying payroll taxes, your Social Security tax, your Medicare tax. They said, hey, there's this thing called self-employment tax. For those of you who are getting paid via W-2, a lot of you don't know this. Most taxpayers don't. But every dollar your employer pays you, they don't give you a whole dollar until you make over $160,000 or $70,000 this year or more. They take 7.65% out of your check. So every $100 you get paid from them, they take out $7.65 and pay you $92.35. That's your Social Security. And here's what else they do. That employer has to match that and put in another $7.65. So for every $100 you, in quote unquote, make, the government gets $15.30. Well, if you have a business and you're not, like a side hustle, you're mowing lawns, whatever your side hustle is, if you have a side hustle, the IRS is saying, whoa, we're not getting our Social Security Administration actually is saying, whoa, we're not getting our $15.30 out of your $100, man. We need that. And a lot of taxpayers, as they started pushing for them, taxpayers like, hey, look, this is just a hobby. I don't want to pay this tax. So the IRS came up with material participation. And if you have a business, this doesn't apply if you work for someone W-2. That's active income no matter what. And they have to collect FICA tax from you and match it for you. But if you have a business, whether it's sole proprietorship, LLC, it doesn't matter. FICA needs to be paid. And the IRS came with these rules, and they say, and Congress, and they came up with these rules and say, hey, if you meet any of these 7 tests, you are a material participant and you are subject to payroll tax. But the nice thing is, we have 40 years of tax court cases of audit precedent where people were audited, they went to tax courts, and the IRS fought like heck to say, you are a material participant, therefore you are subject to SE tax. Now, we get to use that when you're doing the short-term rental loophole, use all their arguments against them to say you're a material participant. All that bonus depreciation goes against your W-2. I love that. We're using the IRS's arguments against them.
And then there was also another reason for the material participation back in the 80s. People were buying and scooping up all this real estate. They were buying all this real estate and offsetting their trade or business income because there was no passive activity loss limitations, or there were no different categories of income like we have now. So you could be a business owner and then go buy 3 or 4 rental properties and have those rental properties offset your income. Well, that was really a glitch in the system. Because,
it was a good glitch. I wish we had that glitch now.
I know. But now there's a material participation and real estate professional status for long term. But thankfully, in the short term rental series, I'm not worried about real estate professional. But material participation dictates whether I can deduct that rental property against my business income anymore. And so let's go through a little bit, now that we've kind of set the stage of why material participation is here.
Yeah.
How would you define it? I know there's an actual definition, but your definition of what material participation is, what would you define it as?
The golden egg, if you're a short-term rental person. Material participation is, are you actively involved in the management of the business, and do you qualify as material participant under the 7-part test? You definitively, the first part of the test, this is, if you are trying to get out of paying payroll tax and you exceed 500 hours on any side hustle during the tax year, the IRS is guaranteed they're going to beat you and take that 15.3% away. On the other hand, if you work 500 hours on a trade or business, and you can take a deduction and get your active income, that's what we call the gold standard. It's a guaranteed safe harbor. If you can prove you spent 500 hours, you're there. If you are married, your husband and wife they can be aggregated together. A wife can work 251 hours, husband can work 251 hours. Boom, 502, you're a material participant, slam dunk. Just be able to document and prove it. Slam dunk, you're a material participant. There's a second test. I don't like going here, but tell us about it.
I've done it before.
I've done it too. I just don't like doing it because it's so nebulous.
It is. That's what you love, the nebulous part of the tax code.
Not when I'm defending an audit. I want to guarantee go in there and say, you're done, IRS auditor.
It's so
Get out of
great.
here.
It's beautiful. So the second test just says substantially all the activity is done by you. And so when it comes to real estate, where I've been successful in this, and you as well, is let's say, it's December 15th. And you closed on a short-term rental property. Math tells me that with Christmas and just time, that you're not going to get 500 hours of management or 250 hours each from December 15th to December 31st. You're just not going to happen.
Could be possible you didn't sleep, maybe.
No, I don't even think there's enough time.
Yeah, I guess
It
not.
would be very, very close.
It's only 168
but
hours
that's
a
you
week.
working 24 hours a day for 2.5 weeks.
You could actually do it in 2 weeks because it's 168 hours per week, so you can't sleep. And you have to do it, but no one's going to believe you. It's not
you don't
possible.
sleep for 2 weeks.
Yeah.
So you can't get 500 hours when you buy on this property in December. It's just not possible. But what if you did substantially all of the work in management? That does mean you are cleaning the sheets, you are mopping the floor, you are mowing the lawn. Substantially,
You're doing all the guest communication.
The activity is you. You are the painter. You are the carpenter. You are the interior designer. You are the property manager. You are everything. But you're everything for 2.5 weeks until December 31st.
And in that case, you don't even need a time log. But, and he's right, we've won this before in cases.
I've had clients buy it on
before.
December 20, dead gum near
As
up
long as
to
they
Christmas.
get it in service,
It just
yeah.
says substantially all.
That's right.
It doesn't say substantially all plus X amount of hours or X amount of
Right.
days. It just says you substantially participated all the activity.
But I prefer to stay away from that one. Because remember, the taxpayer always has the burden of proof. You are guilty until proven innocent with the IRS. I know it's not what our Constitution says. It ain't American. Well, never mind. I'm not going to go down that road. I want to. I really do.
Come
but
back.
I
No.
see Kevin reeling
Stop
me
it.
back in.
Dude, don't.
So I try to avoid that. Because let's say you did provide substantially all the services, but your kid or you had a cleaner come one time out of the 5 times that month. What is substantially all compared to that one cleaner? You did everything, but she cleaned for 1 hour, or came and helped you clean for 1 hour. That's where it gets kind of ugly in the IRS audits. I mean, and again, we've done pretty good in those, but I'd much rather stick with the gold standard 500 hours or the third test, and that is?
The 100 hours of material participation. It's a lot lower than the 500, but there's another kicker on it. So you have to have 100 hours of material participation plus more time than anyone else. That is your property manager, which some CPAs disagree with, but you could have a property manager on the property. It just says 100 hours plus more time than anybody.
Yeah.
That's more time than your painters, your cleaning crew, your property manager. And typically with our clients, that's where the majority of them hit, because in that first year that you buy this short-term rental property, it's a lot more work than you probably think.
Yeah.
Shopping for it, staging it, just getting it ready for market,
Yeah.
doing pictures, all that little stuff, getting it ready for Airbnb, and all of that is time. And you're traveling to and from the property. We're picking up that time. There's just so much work, and the 100 hours is a very easily reached goal, especially if you're married.
Yeah. And like Kevin said, some CPAs don't all agree on who you have to beat. Here's an interesting side fact. The actual tax law says taxpayer has to spend more than, or at least 100 hours and more than any other individual. So does that
What's an
include a company?
individual?
Well, that's where I got into it with our old tax attorney friend, because he was saying, hey, you can do this all the time. And this is one of the few times I disagreed with him. Actually, maybe the only time. And I think I was right and he was wrong. Because we have actual criminal law and other civil law that states a corporation is treated like an individual. They have the same constitutional rights as an individual here in the United States. So I think there's other tax law that says an individual is what you would think it is. It's a human person. But I like to avoid those nebulous stuff. Not to say that we wouldn't make that argument if we didn't have to for a client, and we very well could win, but it does say that. Sorry. Interesting side fact. You know I like to go on these tangents because I love tax.
And I've worked with you far too long. I'm used to it.
Okay. So those are the 3 tests, and you need to be able to meet them. But let's talk about the fact that it's always the taxpayer's obligation to defend themselves and prove themselves. It's up to you to substantiate your material participant. Unfortunately, IRS won't just take your word for it.
They don't? Oh, they don't trust us? We're
Do
guilty.
you trust them?
No.
I don't. Some of them I do.
You are 100% guilty if you're pulled for audit.
Yes.
And this is the stupid thing about audits. Like, they have copies of your W-2, they have copies of your K-1, they have copies of your 1099, but when you get pulled for an all-inclusive audit, they're gonna be like, will you please supply us with your W-2? Will you please supply us with your 1099? Will you send us a copy of your tax return? I'm like, guys, y'all have all of this information.
I was in an audit once,
inefficient.
and they want us to provide the W-2, and it was 3 years later, 2.5 years later, and the client had lost the W-2, right? He didn't have it, and he was no longer at that employer. I think they had closed down or something, and the IRS said, I will not give you credit on your tax return unless you, for that withholding payment you claim on your tax return without you providing the W-2, and I'm like, you got the W-2. And he's like, well, that's a different department. That's how our government works, right? I was like, you got to get it. There was a way for us to go get it from a different department, Social Security Administration. God, that was annoying, but yeah. So you better substantiate it.
You're gonna have to prove your innocence. And when they sit across the table, and you can hire a CPA, which we always recommend, that
Definitely.
we represent you, because one of the things, if you get pulled for audit and they start digging around, you want to be short and sweet, to the point, answer the questions, do not elaborate. You just give them what they want and try to get them out of your office. That's your goal. give them what they want, keep them happy.
Not a cent more, but
Get them away.
And not necessarily everything they're asking for, because some things they don't have the right to have. I
Yes.
mean, so be careful. Give them as little as possible, but don't lie to them. Be forthcoming, obviously.
Yep.
But hire someone
And
to
so
represent you.
when they're gonna sit across in the interview process, and they're gonna say, okay, you took this short-term rental, and this argument in which this sort of strategy first came out, a lot more of the audit was, hey, this is real estate, this should be on Schedule E long-term. I think that this strategy is out there enough to where the focus is going to be on the nuts and bolts, and they understand that this strategy is legit. We'll see. But they're going to sit across from you and say, I need your proof of material participation. So proof of material participation can look like a number of things. It does not have to be a time log. We just agree
It's
that
easy to defend
it
with
is
the
the
timeline.
best definitive way to defend your material participation stance because it's actual factual data. Another way you could prove material participation is by calendars, emails, texts. You can kind of tab up the time that it's spent to do all of this work, and you can it's just so much easier to treat yourself as an hourly employee for material participation.
Treat yourself as an hourly employee for yourself, who's
Yeah.
earning a big old tax benefit.
That's right. You're going to just sit down. Let's say you're managing your rental property, talking to some guests. From 7 p.m. to 8:30, you worked, and in the evening, you worked on your short-term rental. Well, that's an hour and a half that I'm going to document in my time log. And over the course of the year, I'm going to have a date. I'm going to have a time in an increment of maybe 5-6 minute increments. Then you're going to have a description of what you did. And then that's it. You have a date, time, a description, and maybe a location. If you're doing travel and you have multiple properties, you probably want to track it by property. So if you have multiple properties, we want a location of how much time per property.
Here's an important thing to note, though. The IRS has caught people that made up baloney time logs. And they've caught them a lot. Like, there's this one court case. This wouldn't happen now because no one writes a time log with a pen, right? But they say, and there's multiple tax court opinions that say this, if the time log was taken contemporaneously, the IRS has to give it more weight, or who's ever challenging the taxpayer does. And back in this one case, someone said, this is my time log. It was for real estate professional, same, but similar type rules, right? They're auditing real estate professional. And he had time log. And they hired, apparently there's these kind of chemists, forensic chemists or something, that went and looked and did this some weird big like spectrograph testing of the pen, the ink on the paper, and proved that it was all taken within like a 1 month period, and they threw it out, even though it was a darn good time log. So don't fake your time logs, keep them contemporaneously.
As you go.
As you go,
Very
in
important
real
too.
time.
And and they can tell. If they say, hey, where's your material participation log? And the night before, you're up till 2 a.m. just chugging coffee, getting this thing out. They can check the metadata of your file and see edited times. They can just, as you go, maybe once a week, once a month, something probably more than once a month, but you want to just record that time. And then at the end of the year, this could be done in Excel. This could be done in QuickBooks. You can set yourself up in any sort of time. Clockify is another app that you can use. There's so many apps.
A lot of our clients like that. That one's kind of easy because it's always on your smartphone.
And
you
you
just
just
click it,
do.
start it, stop it, and it's constantly keeping metadata that's showing you're doing it contemporaneously.
Yeah.
I like that one.
And so technology is so easy, so good that it makes it so much easier to do it.
Yep.
And then it's going to be the backbone of an audit that potentially saved you hundreds of thousands of tax. Why not? That is what we recommend. Is the time log. Not required. If you just Google material participation IRS, Google that, you'll see the test and you'll see kind of these rules that we broke down. And it does say that you're not required to do the time log. It's just our recommendation because it's the cleanest in our experience.
Just because you take short-term rental loophole doesn't mean you're going to get audited, and most of our clients don't.
Audit rates are still historically down. We probably did 300 cost segs maybe a year for our clients.
We have
250,
3 audits
300.
last year.
Yeah, we had probably 3 or 4.
For 2 years ago, yeah, they're starting to catch up.
And all of them were no change.
Because the clients listen to us. Yes. Not all of them, just thank God
ones
the ones that got audited did.
That's all that counts.
Amen.
We're batting 1,000.
Yes, we are. Let's keep that up. Help us keep that up, clients. Please continue to follow our instructions. It's nice. It's so much fun when you know a client's getting audited and you go look in the audit defense we prepare for them that tax year and you see, boom, there's their time log. A few other things to note, like when you're creating it and creating your substantiation, the IRS is assuming in most cases that you're probably not being honest. So think about it. Hey, if I say I spent 2.5 hours each and every single day doing something for this business, it's going to look a little fishy. And if it's all round numbers, like, on tax returns, one of the things we learned in Tax 101, like if your client spent $1,000 on this expense even, take $1 away, give them a $999 deduction because 1,000 round number looks fishy, looks made up. Same thing with time logs. So just be careful with it. And again, like Kevin said, you don't have to have a time log, but you need to have some kind of substantiation. We've had multiple audits, whether for real estate professional or material participation, where there was no time log. But we were able to go back, and it took a lot more time and cost them a lot more money for us to defend it. But we go back and go through receipts, travel records, calendars, et cetera, et cetera. You can even do interviews. The one other thing we didn't talk about, so time logs are awesome for 500 hours. That's great, our gold standard. But if you're doing what we call the bronze standard, 100 hours plus more than anyone else, you got to be able to prove more than anyone else. How can you do that?
In a perfect world, people would give you that time, but more than likely no. So more than anyone else, so for your cleaning company, all we're going to do is do something reasonable, right? We're not going to get it down to the minute, but we're going to say, hey, on an average guest turn, it probably takes my cleaning crew, I can see when they check in through my cameras and check out, they average 65 minutes to get my house flipped and ready to go for the next guest.
Yeah.
Then you just multiply that 65 minutes by how many guests stayed. That's very reasonable to assume that's how long your cleaning company worked.
And the IRS would agree that's reasonable.
Now, there's other people doing work for you. You might have a painter, you might have lawn care. Do the same, just do the best you can. If you need to, a really good thing that we like to recommend is you just ask them. Just go up to your property manager, go up to your lawn care guy, go up and just say, hey, for tax purposes, I just need to know how long you work on my property, just because I have to beat you in hours to develop my tax plan. Has nothing to do with your service, has nothing to do with my property.
That's very important.
Nothing.
Because a lot of property managers, you go up to and say, I need to know how much time you're spending. The immediate thing they're thinking is, this guy is thinking, I'm not worth it and I'm hardly working. So he might only spend an hour a week managing your property, but he'll say, about 10, 15 hours a week. So just make sure you explain the details.
For real, I need to know.
And one big thing, so even if you messed up a little bit on your tax return and you ended up taking deduction you shouldn't have, or you can't prove you're a material participant because you didn't follow our instructions, even if that happens, the worst case scenario is you owe more tax and maybe some interest and penalties. If you ask, or if you lie, if you commit fraud, if you write a letter from your management company to yourself and they catch you doing that, it's not just taxes you're going to owe. You go to jail. So don't commit fraud. Just get the right truth.
Yeah. And, we're running out of time on this episode. And one thing we didn't get into was the actual nuts and bolts of what is material participation, like painting, all that. So like we mentioned at the start of this, it's a very nuanced subject. Material participation for one taxpayer could not be material participation for another taxpayer. Yeah. It varies on your facts and circumstances.
Shopping at IKEA can be one for some people and not for the others. Travel to and from the property for some, not for the others. But just think about anything that you can legitimately, and an average person would agree, hey, what you're doing right there is for the benefit of your business.
Mm-hmm. Yeah. So what I would recommend is that if you want to understand material participation more on a detailed basis for your specific situation, that you go to our website, revotaxpayer.com. You can schedule a consultation there, and then we will get you some information to help you set you up on the right way. We offer a real estate tax package, and it is specifically designed for people who are just now getting into the short-term rental game. That here's what we walk through everything. So if you bought this real estate tax package that we offer, you're going to get personalized coaching. You're going to understand how to structure it. Do I want an LLC? Do I want an LP? Do I have partners? Is this a husband and wife? Do I have my kids involved? We understand all those facts, get the correct entity structure on the front end. We walk through material participation for your instance. We walk through the tax rules. We get you set up on Clockify. We get you all the tools you need. We talk about bonus depreciation, cost segregation, purchase price allocation for your situation.
That's a lot.
because you can get a lot of general advice on AI. You can get a lot of general advice on YouTube. This podcast, very generalized, because there's many people listening and watching, and it's not just me sitting across the table from you. So you need that personal individual consultation, and that's what we offer. So please reach out to us if this interests you and you want to understand more. We can teach you more, and then, man, we can make this a really good tax year for you. So thanks for listening. I know we didn't get as deep as we wanted to. It's just so much here, and everything is just so different. So thank you for joining us, and we will see you next week, and we're going to continue our short-term rental series. So we're looking forward to it. So we'll see you next week. Thank you.